I set up Middleton Enterprises because I wanted to help other entrepreneurs who were ready to scale up. I saw there was a need for money and a need for support. And that's what we try and provide. It's what we call entrepreneur-friendly capital.
We're all about backing entrepreneurs. We want to help founders to scale their business. We're not looking to run the business ourselves. We hope that we can provide some guidance and some introductions that might be helpful. And we don't take private equity style terms that give us control and a disproportionate share of profits.
Unlike traditional private equity players, we won't take preference shares. We only invest ordinary capital. That means that our objectives are aligned with the founders. So if they win, we win. And if they lose, we lose.
We want to help build with the entrepreneur a long-term sustainable business. We aren't a fund who needs our money back in a set amount of time. And we don't try and load a business up with debt. And we don't encourage them to grow too fast because we see ourselves in this for the long term.
Our exit time horizon isn't something that's fixed like a lot of other investors. We can be more flexible on how the growth journey plays out. So we typically prefer to grow more sustainably at the start and grow faster towards the end. But we leave that up to our management teams and we buy into their vision.
Middleton Enterprises is sector agnostic. We're really looking for a shape of business that we like, is a proven, profitable concept that's based in the UK, that has ambitions to scale significantly over the next 5 years.
We typically value a business based on the profits that it generates. That can be the actual profits from recent history or the future potential of that company. We do look at comparable transactions in the market, but at the end of the day, it comes down to what a founder is willing to sell at and what we're willing to buy for.
What's really quite exciting about the proposition we have is Jeremy, our founder's commitment to make sure that the investment benefits not just the company, but the founders in that process. It's really quite rare to see that level of commitment and flexibility and refreshing. And that's something that I think adds a lot of value, not just to our investments, but to the founders on making that journey an easier one.
We try and help as much as possible. Now, what does that mean? Well, it depends on the company, but we might help by finding some great operational expertise. We might help by helping them find the right finance to really grow the business long term. We might help by looking for new sites for them, or it might be that we just either are in a position to give some critical advice, or we can find someone who is. And we like to think that we, having been on the journey, understand what it's like to be an entrepreneur. We are open, for example, to encouraging the entrepreneur to stay leading their business for a very long time. We don't want to run their business, but we know that the most successful businesses make the real money if they compound their growing business over a long period of time. And we encourage them to stay if they want to stay. And we also encourage them to see that if they want to take some money off, they don't need to sell. At least they don't need to sell out of the business completely. So we are quite often will offer entrepreneurs secondary so that they can have some cash out of the table and de-risk themselves either on investment or at a later stage. And basically most venture capitalists don't offer those two things. So that's what we mean by entrepreneur-friendly capital.